Greetings. This is Justin Allen, the Elite Nurse Practitioner. Welcome to the Elite Nurse Practitioner Show, a podcast dedicated to nurse practitioner entrepreneurism and achieving financial freedom, where I talk directly with nurse practitioners who need help. Listen up. Our market is saturated. Jobs can be scarce. We are underpaid. We are undervalued. We are taken advantage of by the sharks within the healthcare system. And frankly, screw that. Sick of it. And it's time for a change. And listen, I'm here to help make that happen. We are powerful. We can forge a path where we are in control of our career and ultimately our financial and personal well-being. You do not need to submit to healthcare administrators and your doctor overlords. You do not have to take the measly salary. You do not have to work 50 to 60 hours a week. There is a different way, and I'm here to show you that path. This podcast is raw and unfiltered. I have not talked with the nurse practitioners in this podcast prior to the call outside of an email exchange to schedule the episode. What you're about to listen to is a consultation session between a nurse practitioner and myself. It is real, it is unscripted, it is unplanned, and I have no idea what we're going to talk about. Anything and everything can happen during our conversation. The nurse practitioners in these episodes are struggling with an issue in their professional or financial life, and they have reached out to me for help. My goal is to help the nurse practitioner with actionable advice that will enhance and improve their professional, business, and financial life. My other goal is to hopefully help my nurse practitioner sisters and brothers build a more productive, powerful, and free life. So I hope the content and information within these podcast episodes does just that. All right, on to the episode.
Hey everyone, Justin Allen with the Elite Nurse Practitioner. I'm going to do another solo podcast this week. And today I wanted to talk about some investing and finance topics to help some folks navigate a little bit of a volatile market and to put your mind from income generation to investing and developing a passive income, basically. So I'm going to talk about this over an hour lecture at the San Diego conference, October 3rd through the 5th, just FYI. So if you want to check that out, just go to elitemp.com and that information's right there. But today I want to talk about how do you set up a portfolio as your business, your practice begins to generate revenue. It's really important that you have your money work for you guys. You know, way too many people don't invest their money. Like, I talk to a bunch of MPs out there, and it absolutely blows my mind that they'll have a couple $100,000 sitting in their business bank account, literally doing nothing for them. Now, that's a good problem to have. I mean, I'm sure many of you probably wish you had that problem, right? So be smart with your money, guys. You always want to have your money be working for you, basically, okay? Always. Like, your money needs to be working for you. The only money you need to have in your checking account, okay, personal and business, is basically just your emergency fund. And then, like a month of expenses, essentially. Like, that's it. Anything else needs to be put into the market, okay? You need to have your money working for you, essentially. It needs to be somewhere where you're at least earning 4 or 5% on it, okay? Especially if you want to just keep it as cash, essentially, all right? So first step, okay, is determine what your cash reserves need to be. And that should be mostly your emergency fund, okay? Many of you probably already have an emergency fund, but in my opinion, what's recommended is like 3 months. In my opinion, I think it should be like 6, maybe even 12 months for a personal emergency fund. If you have 1 year of expenses in the bank in like a, money market account or a high interest account earning, 3.5%, 4%, it gives you a massive buffer for your life. I mean, a tremendous buffer in your life. If your business shut down or you lost your job or whatever, you would have this money to get you through that storm, right? So 6 months is what you really should strive for a personal emergency fund. Keep that in the bank. Your business, 3 months, okay? I don't think you should have more than 3 months business expenses in the bank, because you should still have revenue coming in to pay the expenses of the business. And if your business just stopped generating revenue completely over 3 months and you had to tap into that 3-month emergency fund to keep your business alive, to keep, to pay the rent, to pay employees, something's terribly wrong with your business, right? So you shouldn't ever have that problem. But with like my men's health clinic, we keep $30,000 in that account at all times. Like it never goes below 30,000. When I see $30,000 in that bank account, to me it means $0. Okay, I just like having that massive buffer sitting there just in case, because you never know. Like you might have to tap in that money for some bullshit lawsuit or something. You know what I mean? Like you just never know. Like you just never know where when you're going to need that money. So I keep $30,000 in the account at my men's health clinic. So whatever that number is for you to feel comfortable with, pick that number and stick with it. And then everything else outside of your emergency fund and your emergency fund with your business needs to be invested. Okay. Obviously keep a little bit of amount in there to, pay your bills or whatever, but keep the money out, get the money out of your bank and put it somewhere where you're going to make some money on it. Okay. If you're listening to my voice right now and you have some money sitting in your account for no reason whatsoever, get it out. Like get that money out of your account, guys. Put it into some short-term treasuries. Okay. So if you don't have a brokerage account, okay, you need a post-tax brokerage account. Every single entrepreneur, anyone making over $150,000 a year should have a brokerage account. Okay. If you don't have a brokerage account, go get one. It literally takes like 5 or 10 minutes to start one, guys. It's nothing. Okay. You can go to Charles Schwab or Fidelity or Vanguard. Okay. Either one of those. I personally use Charles Schwab. It's easy. I got used to it. So go create an account and then you'll link your bank accounts to that. And then you just transfer money into the brokerage. And then when it's in the brokerage, you can invest it in anything that you want. Literally anything. Bitcoin, treasuries, stocks, whatever it is that you want. Okay. So every month, get in the habit of transferring everything that's left over into your brokerage account so it can be invested and so it can grow. All right. So my recommendation is if you just don't know what to do with the money, or let's say that you have an idea of what your tax bill is going to be, put that money into short-term treasuries. Okay. You don't have to actually buy each treasury bill bond by itself. Okay. You don't have to do that. You can just invest in a bond fund. I like BIL. It's literally just, when you go into the ticker symbol, look up in Charles Schwab, Fidelity, Vanguard, you literally just type in BIL. Okay. It is a fund that invests in short-term treasuries and it pays like 4%, 4.5%, and it's safe. Like that money's not going to go anywhere. Like the price of that stock, the price of that index fund, just stays the same. Like it just stays the same. Okay. It very rarely ever moves. So it's very, very liquid. So your money is safe there. Think about it as more or less a high yield savings account. Okay. So if you just don't know what to do with your money, or you have a large expense in the future, like I said, like your tax bill, then put it in BIL. That's what I do. Like I put all my money, like if I know I'm gonna have to owe the IRS $200,000 or whatever the hell it is, I just put that in BIL. So that way over the year, at least I'm making a little bit of money off that. You know what I mean? That's the beautiful thing about being an entrepreneur, right? Is that you get paid first before you pay Uncle Sam. When you are an employee, Uncle Sam gets paid first and then you get paid, right? They take your taxes out essentially. As an entrepreneur, you pay your taxes quarterly or at the end of the year, okay? So you can invest that money and actually make a little bit of money off of it. If your tax bill is going to be $100,000, you'll make $4,500, that year in just interest alone. I mean, that's, a couple months of your mortgage payment, right? Like it's not chump change. It actually means something. So that's step number one. Okay. So just have some money in there for, big expenses, or if you just don't know what to do, just put it in there and just let it sit there and grow. All right. But you want to invest your money more long-term focused. So you're going to have basically two options. You're either going to want to grow your money, or you're going to want your money to work for you to pay you a passive income, essentially, to pay you dividends, to pay you interest, to pay you a yield, right? So that's going to be up to you. If you're somewhat young, under the age of 40, and you think you're going to work for the next 20 years, then invest a lot of your money into more growth avenues. If you are approaching retirement, depending on, whatever age that you're at, I'm fortunate enough to basically be retired if I wanted to. So I invest heavily in more passive income. Like I don't really need to grow my money that much. I still invest my money in some growth stocks, but I invest heavily in more passive income, fixed income assets, something that pays me every single month. Okay. So it depends on what your goals are. If you are close to retirement, then start moving your money from growth to more passive income. If you don't plan on retiring for 20 years, then invest most of it in growth so the money can actually grow for you. Or if you just really don't know, just do 50-50, okay? The standard portfolio mix is 60-40, 60 in growth, 40 in passive income or bonds or whatever. But 50-50 is pretty decent, right? I'm more 20-80, 20 in growth, 80 in passive income. That's because I have enough assets that the passive income is actually significant enough for me, okay? So just consider what your goals are. Do you want your money to grow, or do you want to develop more of an income for you, all right? So there are a variety of different things that you can invest your money in, okay? Now, we're talking about the stock market here, guys. We're not talking about real estate or, Bitcoin or some private equity fund or something like that. We're talking about just investing your money in assets that you can buy in the stock market through your brokerage account. That's what we're talking about. So what I would do, a good strategy to do. So let's say let's say your clinic is generating an extra $10,000 a month in profit, just as a pure example. Okay, if you're making more, great. But let's say it's generating $10,000 a month in profit. So you pay all your expenses, right, for your business. You take out whatever you need to live off of, your paycheck through your business, and whatever's left over is your profit. That money needs to come out of your business account and needs to get invested. Okay. So one strategy you can do is just split it in half. $5,000 over here to growth, $5,000 over here to some passive income asset, okay? And get in the habit of every single month doing this, okay? Investing in that and then investing in that, okay? You can diversify that a little bit more as well if you want to, just depending on how complicated you want to get, how advanced you want to get, all right? If you want growth, all right, like just pure growth, a little bit higher risk and a little bit more volatility, a good fund to invest in is QQQ, okay? That is an index fund that tracks the NASDAQ, essentially. The stocks in the NASDAQ are predominantly the tech businesses, okay? The businesses that grow really, really quick, that have high valuations, all right? So your money can grow in there very, very quickly, all right? On average, 10, 15% a year, all right? Some years you get 20, 30%. Other years you might get 3 or 4%, okay? I mean, it's gonna vary depending on the year and depending on what's going on in the world. So if you want just pure growth, pop it into QQQ, okay? Or you can split that in half and pop it in QQQ and then invest the rest of it into SPY. That invests in the S&P 500 index fund. That's the top 500 companies in the United States, basically, okay? That one tends to grow as well. Maybe not as fast as QQQ, but it has a little bit less volatility to it, so you won't see huge swings, all right? So that would be two avenues that you could do, and it's very, very simple. Those are just index funds. You just put the money in QQQ, you put the money in SPY, call it a day. Just put the money in there and just let it grow, okay? Don't look at it. Don't look at it every single day, okay? The market goes up and down, okay? It goes up and down, guys. So just don't look at it every day, all right? And I'll get to that topic here in a minute. And then the other $5,000, the other 50%, put it into something that's fairly safe in nature, You can put it into some bonds, for example. So you could put it in BIL, which are short-term treasuries. Like I said, it's paying about 4% right now. The problem with that, though, is that once interest rates start decreasing, BIL, the payout will start decreasing, okay? If you buy more longer-term bonds, treasuries, you'll lock in that higher yield, all right? So think more long-term treasuries here, 10-year treasuries, 20-year treasuries, okay? Two funds for that are BLV and TLT, okay? So BLV, TLT, all right? They invest in 10, 20-year treasuries. Your yield on that, your interest rate, your dividends about 4.5% or so. And right now those funds are very oversold. They're very undervalued. And so if you buy those right now, you should be able to lock in that interest rate, okay? So you just put money in there and it just grows. It's backed by, the United States government. You'll hear people saying that the United States is going to default and, our government's going to go bankrupt and your bonds won't be worth anything. It's a bunch of bullshit, okay? It's horse shit. Don't listen to those people, all right? They're fear-mongering you because they want you to buy gold or something, All right. If the U.S. government defaulted, okay, and went bankrupt and the bond market got wiped out, do you realize what would happen? The entire world economy would collapse, totally collapse, okay? The least of your worries would be what was in your investment account, okay? You'd be looking for food and you'd be hoping you had guns. So don't worry about it. Like, yeah, sure, have a safe, have some guns and have gold. I do, just in case, but the chance of that happening are, pretty much zero. So don't worry too much about that. Don't listen to people who fearmonger online about that, okay? Your money's generally safe in bonds and treasuries. Now, you could invest in a little bit more higher risk bond. You could go into municipal bonds, for example. Municipal bonds right now are paying 4.5% tax free, okay? They are exempt from federal income tax. And so your treasuries, if you invest in BLV, TLT, or BIL, okay, those invest in United States treasuries, the money that you make from those are taxed at your income level. Municipal bonds are free from your federal tax income, okay? Like they're free. It's tax free essentially. I invest heavily in municipal bonds because of that. Because I hate paying taxes. I can't stand it. Our government blows money on nonsense, and it's just like, I could have used that money for something else. I could have bought a boat, or a Lamborghini or whatever, So anyways, municipal bonds are great. So a good fund for that is going to be NXP. I really like NXP. It's a closed-ended fund. The price of it doesn't change that much, though. So you will not see it appreciate in value. It'll stay pretty stable, but it'll continue to pay you 4.5% every single month. All right. NXP is a good one. NAD is another good one. Okay. NAD. It invests in a little bit lower quality municipal bonds, but that pays you more like 7%. Okay. There's a little bit higher risk there, but the risk is pretty minimal. I mean, it's very, very diversified. If you buy that bond fund, it invests in thousands of different municipal bonds. The chances of all 1,000 of those towns and cities, counties, colleges, whatever it is, those municipalities going bankrupt is pretty much zero. Okay. So you can invest in NAD that pays 7%. If you want something that's very low volatility and should appreciate in price, you can buy MUB. Okay. MUB will pay you about 3%, but the price will appreciate. Okay. The price will increase on that fund as the Federal Reserve lowers interest rates. So as the Federal Reserve lowers interest rates, the value of a bond will actually go up in price. Okay. Because the yield's going down and therefore the bond is seen as more valuable. People want to buy them before the yield and the interest rates, bottom out essentially. So that'd be a good way to invest your money so you get some appreciation from it. All right.
All right. I hope everyone's enjoying the episode so far. I just wanted to take a quick break to thank everyone listening and also give a big thank you to all of my social media followers and email subscribers. If you haven't done so yet, please subscribe to our email list at www.elitenp.com and make sure to follow us on Facebook, Instagram, and LinkedIn. Email subscribers will receive updates on new weekly podcast episodes, multiple weekly articles we publish, new courses, and everything else related to helping you succeed. Remember, all Elite Nurse Practitioner courses are designed to help you build a niche practice, increase your financial strength, and to break free from the rat race. If I can break free and then other countless nurse practitioners can break free, then so can you. Additionally, please share this podcast with your other nurse practitioner sisters and brothers out there. The more NPs that venture out on their own, the stronger our profession will become. Now, let's get back to the episode.
So that's just a really basic strategy, guys. Your money's working for you in that case, though, and it's a lot better than just having it sit inside, a bank account doing really nothing for you. All right. That's just a very basic strategy. I'll go over a lot more different portfolios at the conference when I talk about, building an investment portfolio in a really volatile market, because right now the economy is very volatile in nature. We just don't really know what's what's going on essentially. There's a recession coming, the tariffs, how's that going to impact the economy? We haven't really seen the full effects of those tariffs quite yet, but we will in the next 6 to 12 months. And when that truly gets felt, what's the economy going to do? in my opinion, the price of everything's going to go up. I just don't see how it couldn't. These businesses, they're having to pay those tariffs, and businesses are there to make money. That's why you have a business, right? You're in the business to make money, all right? And these corporations like Walmart and Amazon and stuff like that, they're in the business to make money. You better believe they're going to pass those costs to the consumer. They're going to pass on those tariffs to the consumer. I don't care what anyone says. They're going to, okay? So the price of imported goods will go up. Now, luckily, the price of like milk and eggs and stuff that's, produced here in the United States, those prices shouldn't go up. But Chinese bullshit you get from Amazon or Walmart, yeah, that stuff's going to go up in price, okay? Clothes, I think this is like a Banana Republic shirt made in Vietnam or something. Like, the price of this shirt's going to go up 20% in the next year or something if it hasn't already, okay? So the price will go up on goods. Car prices are going to go up because a lot of the parts that go into cars are produced overseas. Like, this is the thing that a lot of people don't think about. They don't realize that almost every single product manufactured in the United States uses components and pieces and materials from other countries. And those materials and parts are going to be taxed on that tariff. So we will see the cost of goods produced in the United States go up. We're just going to, okay, a lot of it. Luckily stuff that's pretty, beef, we raise our own cattle. Like, we don't have to worry too much about that. Lots of vegetables and stuff. You don't really have to worry too much about that. So just gotta keep that in mind, guys. The next 6 to 12 months, the economy there's a little bit of a question mark there. We don't really know what's going to happen. Okay. So just kind of keep that in mind. Now, there are other things that you can invest in. If you want to heavily invest in growth, you can put most of your money in QQQ and SPY, for example, and you'll see the growth, happen. Now, you can do a little bit of some swing trading, okay? Now, I swing trade a little bit. Actually, I swing trade pretty regularly. And so what I do, this is a strategy that you can use, okay? What you do is you keep an eye on the stock market every single day, okay? So you go to like a website called like Seeking Alpha, for example, and it'll show like the top 10 stocks that gained the most and then lost the most that day. And one strategy you can do is look at that every single day, okay? And when you see a name that you know, and you see it drop like 10 or 20% in one day, usually it's because of some sort of emotional impulse from the market. Maybe they're being investigated for something. So like, I recently bought United Healthcare, UNH, United Healthcare. Yeah, they're not, they're a pretty evil corporation. I mean, they're insurance and they, screw people over basically. They don't approve claims and that sort of a thing. But it's a profitable business, and it's an investment opportunity. The price of that stock plummeted, all right? It went from like $600 a share down to like $280 because of some possible Medicare fraud investigations, the CEO getting shot. Their profit decreased a little bit. It was just a mixture of bad things. So the stock, dropped. I bought that. That company's going to come back. You know what I mean? Same thing with like UPS. UPS dropped it was like 10% or something like that back in April. I mean, it's UPS. UPS isn't going anywhere. I mean, I think I have a UPS driver arrive to my house delivering something 3 or 4 times a week. You know what I mean? So they're not going anywhere, right? And I bought it. I think I bought $100,000 worth of UPS. And over the last 2 months, it's rebounded up. I made a $10,000 profit. I sold it. It was super easy to do. You know what I mean? So a good strategy to do is, like I said, look at the stocks every single day at the end of the day and see which ones drop the most. And if the name is familiar, not something that you don't know about, okay? But if it's familiar, if it's a staple, right? UPS is a staple. United Healthcare is a staple. There's companies that are staples in your life. You know what I mean? And if they see a decrease, they're going to rebound back. They usually do, okay? So those are good buying opportunities. So you swing trade it. You buy it when it drops, and you just hold on to it. Might take 3 months for it to rebound and for you to make a profit, but it will rebound. It usually does. So that's another good strategy, okay? But I want to go back to talking about, looking at your portfolio every single day. People make mistakes when they're investing in the stock market all the time. And the biggest mistake that these people make is that they sell when they panic. You cannot invest in the stock market and be emotional. Okay, guys, you cannot. You have to be logical. You have to be rational. Okay. The stock market always rebounds. It always does. All right. It might take 3 months, 6 months, a year for it to rebound, but it always rebounds. It always does. Okay. Never, ever sell when you see a big drop. Don't, because you're losing money, especially if you're selling at a loss. Never, ever sell low. Okay. Most people buy high and then they freak out and sell when there's a little bit of a stock market correction. There's a little bit of a drop, and then they sell it for a loss. That is the exact opposite of what you're supposed to do. Okay. Sit on your money and wait for events to happen where you see a little bit of a stock market drop. And then that's when you buy. And then you just wait. Be patient. Trust the process. Trust that it will go back up. When Liberation Day happened at the beginning of April, when Trump announced all those tariffs, the stock market dropped like 10, 15%. Some stocks dropped 20 or 30%. I am so glad I had some cash. I bought so much stuff. It's beginning of July now, and everything is back to all-time highs, and everything that I bought when it was low like that, I've made I could sell everything that I just bought in April. I could go buy a car. I could go buy a car with the profit that I made. A nice car. Not a $20,000, $30,000 Toyota RAV4. A nice car. It's stupid money, guys. It's easy money to make if you can be rational and logical about it. Okay. So there is definitely a mental aspect to it. Okay. There is a mindset that you have to have. Don't be like these NPs that emailed me. God, I remember when COVID happened. I had so many NPs email me saying, I think I released an article talking about you should be investing heavily in the stock market right now. And so many MPs email me like, how can you be saying that right now? My 401k has been decimated. I had to sell at a loss and all of this stuff. I bet they really regret that decision right now. I bet they really regret that decision. They lost a lot of money because they were emotional about it. Don't be emotional about it, guys. Okay? Be rational. Be logical. If you invest some of your money and you are freaking out, email me, justin@eliteMP.com. I will talk you out of it. Okay? I will talk you out of that. All right? So do not be emotional with it. Okay? But anyways, though, so really, really get into the mindset of making your money work for you. Okay? I know some NPs out there that have built practices that generate $1 million plus a year in profit. Okay. And they've emailed me and they've asked me for assistance building their portfolio. I happily did it for them. It was no problem whatsoever. And these MPs that I know that, took my advice, they put their money in that, in their brokerage account on a regular basis. And over the last couple of years, they have grown that money a lot. And I know one MP, he's got, I think $2.5 or $3 million in his brokerage account now. And he's invested it heavily in passive income assets. And he could sit back right now and make $150,000 a year plus for doing absolutely nothing. And it's invested pretty safely. Okay. That's because he was disciplined with it. He invested his money very, very regularly. Okay. So get into that mindset of making your money work for you. All right. Don't have your money sit in a bank account, guys. It's the dumbest thing you could possibly do. And I get asked a lot about real estate. I'm just going to throw this in there right now. Real estate right now is very overvalued. And the real estate market right now is extremely uncertain. I would not invest in real estate right now. there will be a correction in real estate at some point soon, I would imagine. There's a lot of inventory on the market. No one's buying stuff right now. Prices will go down. Okay. So if you are looking to buy a house right now or buy a rental property or something, I would hold tight. I would wait. Just be patient. Just wait. All right. Now, rental real estate, I've had lots of rentals. I've had Airbnbs, I've had all this stuff, and I've sold all of it. I am sick of those headaches. They are headaches. Property managers will rip you off. Tenants don't give two shits about your house. Okay. Airbnb guests trash it. It's a pain in the ass. There's always expenses. There's always a water heater going out or an air conditioner or, who knows what else. Okay. And when you actually factor in how much profit you actually make, it's nothing. A lot of the long-term rentals that I had, I know one, for example, was, I think the mortgage payment was like $1,000 a month, something like that, for easy math. And I was able to rent it for $1,500. Now, while that sounds like a good profit, $500, expenses, taxes, property manager. When it was all said and done, I'd make $200. $200 a month does nothing for me. Like, it's $200 a month. That's a really nice steak dinner and a bottle of wine. Like, that's nothing. You know what I mean? So, like, I was like, what am I doing here? Like, I bought this house. I have $100,000 in equity in it. I sold it. I got $100,000. I put that into, I think I put it into a bond fund that pays me 4.55%. I make more money it's sitting there paying me interest. I make more money with less headaches. So, like, on average, you're probably going to make a 5 to 7% return on most real estate, and you can make that investing in some bonds with no headaches, no liabilities, or anything. And I'll end this with investing your money back into your business is always important as well. Okay. At the beginning of this, I mentioned that, you should pay all your expenses, have a business emergency fund, and then take everything else out and invest it. Now, if you are in the growth state of your business, you're still trying to grow, you haven't hit your revenue numbers, you want to get to a point where you're making decent money, I would allocate 20 to 40% of your profit back into the business and invest back into your business so it continues to grow, so you can actually make more money through your business, because your business is always going to be a better investment than anything. Okay. You'll always make more money through your business than anything else. All right. So you invest your money back into your business, marketing, hiring staff, continuing education, buying new equipment, etc. Okay. You invest money back into your business so it can continue to grow, so you can get to a point where you are making a lot of money from your business, and there's not a whole lot of more, room for growth. Like, you kind of tapped it out. A lot of practices will tap out at some point. Like, there's only so many people in your city, right? There's competition coming, etc. So once you get to that point, it's time to start taking that money out and investing it somewhere else. Now, you can start another business if you want. That's always a good idea. But make sure that you never put all your eggs in that one basket. Okay. Like, never take all your profit invested into a single business, unless it is a very lean business that's partially passive in nature. That's a good business to start. Something that's lean to start, something that costs $5,000 or $10,000 to start, doesn't take a whole lot of work. That's not a bad business to start. You know what I mean? But investing into a franchise or something that's going to cost you $500,000 or $600,000 of initial cost, I don't know. That's a pretty big risk. I mean, it can pay off. So, but you keep that in mind. So, anyways, hope everyone thought this was helpful. I'm enjoying doing these little more of these one-on-one kind of consults, podcasts, basically. So, if you guys enjoy these, let us know. Email me, justin@elitenmp.com. Let me know if you want me to do some more of these. If you have any ideas of any topics that you want me to talk about, shoot me an email. Let me know. Okay. If you want a podcast consultation, like, the majority of the podcasts, by all means, email me, justin@elitenmp.com, and I'd be more than happy to schedule a podcast with you, and we can hop on here and hopefully I can help you out with whatever problem you might be having. So, all right. Hope everyone enjoyed this episode. If you, like I said, please let me know if you like these and leave a comment. All right. Bye.
Thank you for listening to the show. Quick legal disclaimer. The content of this podcast is meant for informational and entertainment purposes only and should not be used as legal, financial, medical, regulatory, or practice-specific advice. For information pertaining to your specific legal, financial, medical, or practice-specific needs, please be sure to consult with your lawyer, CPA, medical director, and or your state's practice laws and the most up-to-date clinical guidelines. As always, do your due diligence when it comes to any information found online and in podcasts. The content in this podcast is copyrighted by Galaxy Medical Southwest 2023 and cannot be duplicated, rebroadcasted, or reproduced without our written permission.